Hi, my name's Mark Walhout. For this week's episode of my podcast, I'm trying something a bit different. I'm going to be making a short video for each of my podcasts that outline one or two charts that I talk about in the show that week. So this week I did an episode on dividend investing, and this came from a couple clients that have approached me that are getting ready to retire that are asking, should I just buy a portfolio of dividend paying stocks to create income for me in retirement? And in the episode, I address three what I call misconceptions about dividend investing. The first misconception is that when you get dividends from dividend paying stocks, that it's like a free lunch. There's no impact on the underlying stock. So that's one misconception that I address in the podcast. The second one is that dividend paying stocks beat the market just because dividend paying stocks are better than all stocks in the market as a whole. So I talk about that misconception. And then the third one that I talk about is this idea that dividend paying stocks don't ever interrupt or reduce their dividends, that they're stable income that you can count on in all market environments. And what this chart shows is a hypothetical $1 million investment in a basket of dividend paying stocks from the United States, a similar basket of $1 million in dividend paying stocks from non-US companies, so outside of the US, and then another $1 million invested in dividend paying stocks in emerging markets. The dark blue bar represents the dividends that were paid out in Q1 through Q3 of 2019, so last year, and then compared that to the dividends paid out over the same period in 2020. And what you'll notice is that there was a significant reduction in that same set of companies in their dividend policies. They paid out a lot less dividends in 2020 than they paid out in 2019 because a lot of companies went through some fairly significant financial hardship. And a rational company, when they're faced with layoffs or they're having to service their debt and their revenues are down, like a lot of companies had to endure in the beginning parts of this year due to the pandemic, they're going to do what a rational company would do. They're going to preserve that cash. They may decide to reduce or suspend their dividend. So what this chart is meant to show is that in difficult times, rational companies will and do reduce or suspend their dividend income. So when you're thinking about building a retirement portfolio, you need to be able to think about different ways to generate income when it's possible that one source is not as reliable as others. So you may not be able to take dividends as an exclusive source of income throughout your retirement. You may need to look at selling shares to create a self dividend via capital gain or interest from bonds. There's just different ways that you might need to look at solving that problem. So this chart's from Dimensional Fund Advisor. I'm going to put a link to the white paper in the notes below. I'll put a link to the podcast if you want to check out the entire episode. And thanks for watching, and I hope you're having a great day. Take care.